Alright, here's a trade that I want to go over. This is an entry I took here, this big red arrow pointing at this red bar here. I took it as a second entry short. What you can see here is, here's a swing low, here's your first entry, which we don't take, we only take second entries. We only enter on second entry, so then it goes back up, and here's for a second pullback, and boom, below this bar becomes a signal bar here, and then so the one tick below here would have been 20.52 in the quarter. So I got in here, and one thing you want to notice, of course, the EMAs are still bearish. The overall picture is bearish still, but you can see to the left here of this trade, what have we been doing? We've been going sideways, right? Here's your high, here's your your low. We dipped a little bit lower, but it's been traveling sideways here, and also prices above the 50 EMA and above the EMAs. So whenever you take a trade, above the both EMAs to the short side, you want to make sure that price is able to break back below the EMAs to continue in the short position or bearish position because you're taking a short. But if you see price bouncing off the EMAs after it went above it, or opposite direction here, and you can see that after I got in, moved down a little bit, we're thinking we're doing okay. What happens? It bounces up, and it looks like here also it finds support off of the EMAs. When you see that developing or happening live in the market, that causes some hesitation for me, and I jumped out of the trade at break even. On top of that, I was watching the tick and the advanced decliners, and this time frame is around 7:45, 7:47. So around 7:45, you can see here that we have some green here, green bar. It's going back up. So when you see green bars on the advanced decliners or on the advancers, it's showing some strength. Also at the same time, 7:45, 7:46 here, the moving average of the ticks are starting to move up above zero for the first time in a while, and most of these ticks are staying above zero line. So when I saw this happening on top of this bouncing off of the EMAs, possibly using EMAs as support, I jumped out of the trade, luckily at break even. So this is a good example of, if it looks right, you get in, but as you actively manage the trade and you see what's going on, you can get out. And sometimes when you get out, it's going to reverse on you sometimes and go right back down to where you expected it to go. But there's always another chance to get in. And we can see here now price is bouncing off, or might be using this volume weighted average of price for the weekly. This is the weekly volume weighted average of price as resistance. Maybe. Overall we still look bearish, except for the EMAs are now a little positive, but we'll see. So you don't just jump in because you see this happening, but you watch. We have some conflicting indicators saying that this is more bullish with the 21 above the 50. Price is below the 5-minute range. Well, right now it's in the 5-minute range, so that's kind of, you want to just stay, it could be choppy. This line is the 5-minute average of the high or low of the 5-minute range. It's still below that, which is still a little bearish, but so we're just going to watch it here and see. Ticks starting to dip below zero. Advanced decliner is still showing some green though here, so, and we'll watch it. But right now I'm not taking any trades right at this point. It's sideways. Pausing for now.